Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. I hope you're doing well, and I hope you're having a great Friday. If you're new here, every single Friday I break down the latest news and hottest topics in the world of technology and cryptocurrency over a cup of delicious coffee in today's homemade mug that I made myself. In today's episode, we will have a well-rounded list of things to talk about, from the latest on Bitcoin today to Ethereum 2.0, ChainLink, Cardano, and more, so definitely stick around so you don't miss a thing. Now, like we do on every single show, every single week, let's kick it off with questions from the community on YouTube and Twitter. So I'll head over to the good old iPad, it's right here, and get started with those questions. If you do want to get one of your questions answered, leave them in the comments down below or tweet me at Hashoshi4. I'm always looking for new questions to answer. If you would be so inclined as well, please do subscribe to the channel and hit the little bell notification button next to it so you can get a heads up whenever new content hits the interwebs. Sip of coffee. Oh, and check out my nifty little Cash App, let me get this in focus, Cash App customized card. It's pretty dope. Definitely recommend that. You can use it to buy all sorts of things and get discounts on stuff in some cases as well, so that's pretty cool. So let's dive into these questions. Oh, and again, I'm sorry. There's one more thing I wanted to talk about. I'm really proud of this, but this past week, my channel broke 1 million views, and I really appreciate all the people who shouted me out on Twitter to congratulate me on that. I really try hard to make this channel super valuable, super useful, and super fun to watch, so I appreciate all the support and every single view you guys have given me, so thanks very much. The first question comes from First Last. Bitcoin halving 2020 explained. Great info. Thank you. Does it make any difference having Bitcoin on an exchange or a personal wallet on the day of the halving? This is a great question, and a lot of people ask this question. This mic is like in my face. On the halving and all this stuff that's going to happen as a result of the halving, this all happens at the protocol level. So you don't need to worry about anything when it really relates to the halving itself. Having your Bitcoin on a hardware wallet, a software wallet, or on an exchange doesn't really matter during the halving. But, and there's a distinct but here, I recommend that during the volatility that will likely happen as a result of the halving, that you have your Bitcoin in your possession on a hardware wallet at all times and not on an exchange. Because when things start to change and things start to change in the protocol especially, exchanges have a tendency to make mistakes, or people make mistakes, they panic sell, and you can get your Bitcoin stuck at a loss, or just things can happen and you don't want to leave it to chance. So make sure you have it in your possession. I'll link up some of my favorite hardware wallets down below. If you don't have one yet, just buy one. It's worth the 50, 60 bucks that it takes to get one, even for a cheap one. Just do it. I promise you it's well worth it. Now, let's move on to the next question. Thank you very much, First Last, for that one. Vittorio Catroni asks, only a few comments from my side. This was about a different video that I did. I think Ethereum should now not be considered an altcoin, but rather a coin on its own. Different than BTC in terms of its value add to the space, but if it's considered an alt, then it's in the top. I agree. I think Ethereum now is not even really an altcoin. I think it's very much its own sort of standard by which other projects are measured. But I will say that it is still an altcoin in the truest definition of the word, because Bitcoin is the original protocol, Ethereum came after, so it's an alternative to Ethereum, to Bitcoin. That being said, I've been campaigning for a long time that Ethereum and Bitcoin can't even be compared to each other because they're so different in architecture, in structure, and in purpose. They're not even close to the same. So I'd actually agree with you, Vittorio. I think Ethereum, Ethereum should be its own coin. We shouldn't be calling Ethereum altcoin anymore. It just doesn't really make sense. Compared to Bitcoin, it's not even close to the same. So in my list of altcoins, which if you haven't seen that video, I'll link it up somewhere over here, I think. I found a lot of coins like Tezos, like Cardano's ADA, that bring value to the ecosystem through the use of smart contracts. Now, from that point of view, I have the feeling that Ethereum will always be a step ahead due to its network effects. I wonder if there will be space for the others. This is another great point. So from the perspective of Ethereum having such a first mover advantage and having network effects because they have hundreds of thousands of developers that do things with Ethereum and Ethereum products, Solidity is a language that is now very well defined and is now starting to come into its own in terms of stability. that begs the question, is there room for any other protocol? And my answer is still yes. The main reason why I say that is because I think we're going to start to see the hyper specification of protocols down to what they are intended for. I think we might see something like Ethereum being used primarily for tokenization in DeFi, while things like Cardano might be used for financial reconciliation, transactions, and traceability. Because in a lot of ways, the language that governs scripting on that particular protocol governs what apps will be built on it. And the developers that are attracted to that language are going to be from a different background potentially. So the people who are very much into Haskell, and a lot of the examples given for Plutus in Cardano's ecosystem, for example, are very financial in nature and very deterministic data processing of financial transactions. A lot of the documentation is focused on that. So maybe we'll see that being a specific use case for Cardano. And then you have other languages from a bunch of different protocols that also have their own unique skill sets and their own unique use cases that apply to it. So I think we're going to see a lot of different protocols start to take some market share in little isolated buckets or verticals, rather than just seeing one protocol dominate everything. And I think that's probably a good thing. Thanks very much for your question, Vittorio. King Lalabella. Question, is blockchain Internet 3.0 or does blockchain run on the internet? Another great question, and another one that confounds people all the time. And that would be, the blockchain and a blockchain protocol in general runs using the internet. Connectivity all happens over the internet in a large part, or the protocols that run the internet today. But that being said, a lot of what blockchain does and a lot of what these protocols do are sort of an improvement or a next generation layer on top of what the internet already does. And that's connect disparate systems and disparate servers in a decentralized web of different computers and information. You can then share across all of these different computers, so on and so forth. You had distributed computing and file sharing systems come out and try and improve upon this. But ultimately, the internet sort of centralized around a lot of different entities, and that's kind of just the way that it happened. That being said, I think blockchain is very much the Internet 3.0. It's bringing brand new protocols on top of what the internet already does, and potentially new protocols to replace things we've already built within the internet's core infrastructure. So there are a lot of projects out there that talk about this: Elastos, Nexus, Skycoin, etc. There are a bunch of different protocols that talk about the internet and how blockchain will revolutionize it. But I think it's going to take a long time before we see blockchain start to really permeate into the core infrastructure part of the world, because it's heavily, heavily cemented. So hopefully that answers your question there. And all right, so Crypto Hour. He says, Irish people are always asking me now about Bitcoin. That's pretty funny. The fake theories they've heard are crazy. Yeah, people hear about theories all the time. So he's saying, Crypto Mythbusters, I'll get the domain and create the platform, you make the content. Crypto Hour, huge shout out to you. I think this has got to happen. And you know what? Big shout out to my buddy Crypto Hour here, because he inspired me to do what I think will be a new little segment on the show called Crypto Mythbusters. I will take some hot cryptocurrency related myths that get a lot of attention and bust them like the myths that they are. I'm kind of done with my iPad here. Now, the golden crypto myth is really that crypto is only useful for criminal activity. This is all part of a diatribe about crypto that comes from the politicians, big businessmen, and public figures who would seek to destroy crypto and its reputation. Recently, a blockchain analytics firm or research firm called Chainalysis, who have a vested interest in actually catching cyber criminals using crypto as part of their business model itself, claim that less than 1% of crypto transactions are provably related to criminal activity based on their research and data. That's a whole heck of a lot less than you might think, and that you might probably hear about online, as crypto gets slandered so consistently in the media and by a lot of notable people. Let's be real, it's probably more than 1% of transactions that's used for illicit activity. It might be closer to 5 or even a little bit more. But even then, is that a surprise? No, it's not. The fact of the matter is that most cryptocurrencies are not anonymous. Actually, I'd argue that none of the cryptocurrencies we have are truly anonymous, because you have so many ways that you can mess up and make yourself only pseudonymous. That word is so difficult. But you know what cryptocurrencies all are? Infinitely traceable and auditable. So do you think a cyber criminal or some nefarious actor wants a digital, immutable record? of activity that might also be linked to IP addresses and other device identifiers? Hell no, they do not. They want to use cash, physical notes, or bartered goods that can be anonymously handed over, leave little to no trace, and everyone can walk away. I understand, though, why this rhetoric is so popular. Crypto is indeed undoubtedly used for nefarious purposes. It is a fact. But to imply that illicit activity is its primary use case is at best a disgusting misrepresentation of the facts. I am all for stamping out dark markets, terrorism, cybercrime, and other financial crime facilitated online. But making crypto the patsy for the real issues here and the real issues at hand that are causing these problems is definitely not the way to do that. So consider said myth busted. If you want to ban crypto, you want to ban cash also for the same reasons. And surely, if you're going to ban crypto, people should stop flaunting the idea of a digital dollar because we clearly are not there. So I'll step off my soapbox now and we can talk about something positive that a big public figure said about crypto recently and about a project that I happen to like quite a bit. Tyler Winklevoss, one of the twin co-founders of Gemini and renowned Bitcoin billionaire, recently stated his admiration of ChainLink as a project with huge potential in the crypto space. Winklevoss likened ChainLink in its current state to the early days of Bitcoin and Ethereum in terms of its potential impact from a technology perspective. That's cool. He was quoted saying that ChainLink shows real promise and technical merit, which will be music to many Link fans' ears. And this coffee is music to my taste buds. The key thing, though, to note in that statement is the technical merit part. Passion for a project and sound marketing only goes so far to move the needle in the long-term scheme. The technology has to solve a problem for a project to go anywhere. And I share the opinion that ChainLink does just that. Oh, and by the way, my coffee is again from my favorite Red Rooster Roasters. That's like a cool little tongue twister there. They're based in Floyd, Virginia. They are quite literally the best coffee company that I've ever worked with in terms of buying coffee consistently. They don't sponsor the channel, but I shout them out because I love them so much, and I get the monthly hookup from them for $22. They ship it out to my house, and it's well worth it. So if you like delicious coffee, check it out. Floyd, Virginia, Roaster, Red Rooster. All right, it's time for everyone's favorite segment, 404 Logic Not Found. For those who are yet uninitiated, in this little firecracker of a segment, I highlight notable tech-related fails or otherwise just stupid moves that happen in the world that need to get some attention. This segment is fun, and if you like fun, then you should probably gently and with tender loving care press that like button, but do not smash it, show it the respect it deserves. I'm such a loser, man, honestly. Well, let's go on this stuff. On Thursday, former Bakkt CEO and Georgia Senator Kelly Loeffler announced on Twitter that she will be serving on the task force to open America back up in the wake of the economic turmoil we have currently happening in the world. This appointment comes after Loeffler was criticized widely in the media for allegations that she, in particular, participated in insider trading. It was reported related to this that a huge amount of her personal assets were sold off shortly after her attendance at a Senate Health Committee briefing, which sparked controversy over whether insider knowledge of a pandemic brewing triggered those sell-offs, which would, of course, not be strictly legal. For the record, Loeffler claims that she and her husband had no idea of the sell-off of their assets, as it was done by a third party and they were not notified. I'll leave it to you to decide your thoughts on that whole thing. I'm not going to play the politics game. The real issue here, though, is that a person with relatively little experience in politics and with controversy swimming around her is getting a huge appointment to what I believe is a critical working group in making decisions about the United States reopening business. 404 Logic Not Found. I really don't get the decision by the current administration to throw a huge appointment to someone without a lot of experience and all this controversy surrounding them. At the end of the day, it just seems to be wrong. 404 Logic Not Found. Anyways, moving on. In the world of Ethereum 2.0, we have some really good news from the legendary folks over at Prismatic Labs that gives renewed optimism, if you will, that we will see phase 0 of Ethereum's latest protocol by July of 2020, shortly after Ethereum turns 5 years old. Time really does fly. With the latest testnet launch called Topaz, Prismatic Labs is running the Ethereum 2.0 protocol in its full mainnet configuration. meaning the full 32 Ether is required to participate in the staking ecosystem, and the full hardware specs that will be required in mainnet to get everything set up will also be required here. I was actually pretty pleasantly surprised at the hardware requirements and specs that they posted and how minimal they ended up being. Many lower end laptops will probably be able to run this, and you only need about 100 gigabytes of storage at least per their recommendation. Now, what we need to watch here is three things. One, we need to see that the Topaz testnet is stable during staking and that cartels don't form in the public net. We also need to see that the scalability numbers are testable at scale. So hopefully we get about 1,000 staking nodes at least that we can work with. And then we need to see that there is a release candidate shortly thereafter that shows that the testing has gone as planned. I think things look really good though for staking part of Ethereum 2.0, and that launch this year is looking pretty darn good. Then we'd probably see sharding in Q1 or Q2 2021, so I am pretty stoked about that. Now, for those who might be watching who don't really know why Ethereum is moving to proof of stake or what that's all about, I recently did an interview with another YouTuber in the crypto world, Rice Crypto, about this very topic, and I think it hits the points really well that you need to know. So shout out to Rice, who is a really honest and genuine dude, and please do check out his channel and show him some love. So I'll link that channel up down below, but I'm going to play a clip of this right now.
With what's going on right now, there's a lot of hype about Ethereum 2.0.
Yeah.
And I've been doing some research and I've got some pretty good knowledge about what's happening, but I'd like to get your take from a technical perspective. What can we expect for Ethereum 2.0? And do you have, I guess, like any type of information about when there might be like any launch dates or anything like that yet at this point?
Yeah, for sure. So I think for anyone that's completely unfamiliar with Ethereum 2.0 and what's happening, essentially the current Ethereum network is a proof of work network, just like Bitcoin is, right? It works through the process of mining, which is just basically wasteful computational effort done by miners to protect against different issues that would happen in the network as a result of consensus, right? You've got to create some sort of economic force to make people behave properly. And also to drive the value of the currency up in general. So the issue is that because of that wasteful computation and because of the challenges that are associated with maintaining a proof of work network, Ethereum made the decision they wanted to move towards proof of stake, which is basically a measure of the incentive structure is about who has the most wealth in the network and how much are they willing to put at stake in that wealth to become the block makers, the people who mine on the network. And the whole idea there is if you have more wealth invested in the network, you have more at stake, you're more likely to act in accordance with what's beneficial for the network itself, lest you lose your resources or devalue them.
Right.
But the challenge is that it's not as simple as just moving from proof of work to proof of stake and just flipping a switch. And so all the research that's been done over the last probably 3 years now has been how do we make proof of stake safe and how do we make proof of stake and this migration actually scalable so people can use the Ethereum network for stuff that they've been using it for at scale, like NFTs, non-fungible tokens like CryptoKitties, DeFi, which is huge. And I know we'll talk about that today. You need to be able to process a large number of transactions at a time.
Right.
So that's what Ethereum 2.0 is all about. And from a tech perspective, they're doing that in a number of ways. But I think the things you need to note are, one, they're trying to implement sharding, which is essentially like taking
like breaking up like a file into pieces.
Exactly. And if you think about it in terms of the internet, right? If you live in an apartment complex or a townhouse, you have an HOA, you're probably running all your internet is all running on one main line over to the Comcast box or Verizon box or what have you that goes out to the networks and data centers.
Right.
So you're all sharing that one pipeline for all of your information. So right now, during this COVID-19 situation, everyone's riding on the same internet line in your community. And so your internet's slower, it's inconsistent. I've been having tons of issues. The same thing happens in blockchains, and you're trying to run all the transactions through the same canonical chain, so that same one single entry point, then you run into issues. So the idea is they want to be able to process data and transactions in parallel using different sharded blockchains that all feed back to what they call the beacon chain, which is the main chain.
Okay.
That's the big one.
So now how are the miners right now like, what is their reaction to this whole idea? Because it would kind of cut out what they're doing currently. Um, I mean, they could essentially mine something else, but a lot of
Yeah,
people, I guess, gear themselves to mine something specifically. So
for sure.
is this kind of going on without a fight, or is there a lot of issues?
Yeah, I mean, there have been issues, but I think that the biggest issues have been the way that they've been going about pushing miners towards proof of stake rather than miners not being willing to do that in the first place. So right now, I mean, there are things like the difficulty bomb. There were things like Prog POW to get rid of ASICs or to make ASICs less effective on Ethereum.
Right.
And I think miners have an issue with that because it hurts their short-term profitability. In terms of the proof of stake migration, I think miners are actually incentivized to want to go this route because when they go proof of stake, if you're a miner and you're not selling out your ether, you have a lot of ether set aside to become a powerful block maker or staker in this ecosystem because the minimum is 32. If you're a reasonably sized miner, you could have hundreds, thousands, maybe even tens of thousands of ether in your in your stores that you can use to stake in the proof of stake network. So I think the incentives are there for them to do it. It's just a matter of when the tools are ready and showing them, hey, this is what your hardware is going to be used for here. How do you get set up? How do you stake? And then what are you going to earn? There are people talking about earning 10% on your staked assets on the Ethereum network when Ethereum 2.0 comes out, which is not a bad trade for
No.
people that are running big mining rigs. They cost a lot to run. So your overhead could get cut down really low and then you just stake passively. It'll cost you a lot less as a miner, quote unquote, to be a part of Ethereum 2.0.
Yeah, no, that makes a lot of sense. And that I'm really bullish on a project Nexus, and you had a chance to interview
Yeah,
Colin Cantrell,
great guy.
which I'd like to talk to you another time about that conversation. But
Sure.
so one of the things that Nexus has created, as you're aware of, is the hybrid proof of stake and proof of work model, which
Yeah.
I mean, now I don't want to see Ethereum copy what Nexus is doing, but I mean, why wouldn't they consider doing like a hybrid system instead of just switching over from one to the other? Or do you see benefits in what Nexus has created with the hybrid system versus switching from one to the other?
Yeah, I do. There are benefits to that because proof of work is really good at a couple of things. One, it's really good at like Sybil attack resistance and as well as really good at enforcing the economic incentive and disincentive structures of doing the right thing in the network versus not, and inherently driving value up based on the cost that it takes to create new supply. In Bitcoin, it's optimized to do that, right? It's optimized to make the network secure, but also to help drive the value up. And we're coming up on the halving. It's the same thing. But proof of work is not very good at enforcing or pushing towards the fastest possible transaction throughput speeds because you get into this issue with things like Bitcoin Cash, Bitcoin Satoshi's Vision, and other proof of work chains where all being equal and everything, the whole protocol being designed very similarly, and you just start moving different things, like pulling different levers to make things move faster, like making the block size larger,
Right,
or making the block time shorter. It's not as simple as that because time is an important component and the effort it takes to mine a block is an important component in security. And that's why you see, if it were that easy, then it would have already been done, right?
right.
So there are a lot of moving parts to a protocol like that. And that's why proof of work is still utilized at such a large scale in the Bitcoin core protocol, regardless of your placement and the ideology of Bitcoin, the protocol.
Right.
The fact of the matter is this is a now 11 coming up on 12-year experiment that has worked out really well based on these principles. Not to completely move away from your question, but it's, yes, there is value in doing proof of work and proof of stake in tandem. But I think the reason Ethereum didn't do that is an ideological one. How do we convince people that we want them to use this new protocol we've spent 3 years working on or more if we're just going to keep proof
Given
of
that
work
option.
as a core? Yeah.
Right. That makes sense. If you
yeah.
want people to switch over to that particular deal, then you would have to focus on that. So that makes sense.
All right, guys. Hope you enjoyed that little snippet of the interview. Again, please do go check out Rice's channel and show him some love. Now, in the world of Bitcoin, some notable news came out of a DeFi product that uses Bitcoin as collateral, bringing Bitcoin into the ever popular world of DeFi. In essence, this product, called Atomic Loans, uses a single Bitcoin transaction to put Bitcoin into a non-custodial escrow. Then it uses that as collateral to borrow a stablecoin in the Ethereum world like DAI, so that can be used for different DeFi products. The notable part about this news is that using a sort of atomic swap mechanism, that I assume is why they're called Atomic Loans, this makes the most popular digital asset on earth, Bitcoin, in case you weren't aware, making it available to be used non-custodially to participate in DeFi on Ethereum without you having to sell your Bitcoin and buy Ether and then go over and do all this and that and buy stable coins. It all happens in this one platform. This means that Bitcoin holders can still capture the value of DeFi products and enjoy those services without having to sell out of Bitcoin. So I really think that this is going to be a powerful project and product, and the beta seems to be going really, really well based on the feedback I'm seeing on Twitter and online on Reddit. In terms of Bitcoin price news, not a lot to report besides a lot of sideways movement. We're in and around $7,000 US, and I couldn't really make a case either way for a price drop or a price increase. I really don't have a clue where it's going, and I'll be honest about that. On one hand, we could see a drop and a reconsolidation right before the halving, or we could see the halving and the strong looking hash rate, which is great by the way, push the price up ahead of the halving. So I'm going to leave it to you. What do you think? Are we going up, down, sideways, or do you have no idea like me right as we come up to the halving? Comment down below or check out this YouTube poll. I'll put it up here. You just click a button and let me know what you think. Now, moving back into the world of DeFi, because I think this is something important to note. One of my favorite companies in the space, ShapeShift, just made a genius acquisition of a company in the crypto world that will inevitably reduce the friction involved in accessing DeFi products non-custodially from within ShapeShift's platform. ShapeShift recently acquired Portis, an Israeli crypto wallet company that has a pretty solid non-custodial software wallet setup, and they'll now have bidirectional functionality in place going forward. So basically, ShapeShift users will get enhanced access to DeFi products and services from within ShapeShift's service alone, and then existing users of Portis will be able to natively utilize ShapeShift's exchange services within their app. The biggest thing that I love about both of these products is that they're first and foremost designed to be non-custodial, meaning they don't hold your keys, they don't take your crypto from you. This is how everything should be. We need to get people into the habit of, in a clean UX and UI means, holding their own keys, understanding how to secure their keys, and understanding that it's better for them to own their crypto than it is to trust someone else with it. So hats off to ShapeShift for pushing the envelope on this issue. Now, for all of you crypto fans out there who love Cardano, I've got some good news that just hit the airwaves this week about another successful patch upgrade to the Byron code that runs the core components of Cardano's mainnet. But before we dive into that, coffee break. Man, I'm tired. Cardano's current mainnet right now, in my mind, had some of the sync and stability issues that we really didn't want to see. And so before we see Shelley coming out into the real world and into mainnet, it was critical to get those fixed. So what's being called Byron Reboot is now critical to fixing these sync issues. Now, over the last few weeks, we've been seeing a lot of movement on this Byron Reboot code coming into mainnet, getting released, and Charles Hoskinson's been releasing a lot of updates on Twitter all about it. So it's a relief that this set of updates has gone off relatively without a hitch. I'm going to go out on a limb and say that we will see Shelley staking live and rolling on mainnet by the end of June or maybe early July 2020, right along with the launch of Ethereum 2.0 Phase 0. Remember, you have one shot to make this work, so it's got to be right. And I'm happy to wait and to be patient as the timeline gets pushed so they can test adequately. Now, the positive news here is that this is another instance where Charles Hoskinson and IOHK were clear about a deadline, clear about a product, conservative about the dates, and then delivered on time with the code they talked about. This Byron Reboot, as it's called, was executed as promised, so it's great to see. Cardano remains one of my favorite altcoin projects out there these days, and I'm stoked to see what's going to happen this year with that, and I'm getting ready for Shelley coming soon. Oh, and if you're interested in altcoins, please do check out this video that I did with my pal BitBoy about our favorite altcoins for 2020, at least a few of them for that matter. I'll link it up here on the screen. And as always, folks, thanks for watching. Have a great weekend. And until next time, cheers.